I have to begin with GGP, Bruce. You own 30% of this company. You've put an offer on the table, $15 billion for what you don't own. So far, the read is GGP doesn't like it. What's your next move?
Look, I'm not going to make too many comments, but all I'll say is these are processes that everyone goes through. We think we have a fair offer on the table. We have a great board of independent directors, and they're going to consider it. And there'll be lots of stories between now and when the process ends, and I think they'll see it as a fair offer.
What's going to happen between now and when the process ends for there to be so many stories? How badly do you want it?
We're in the investment business, and we'll assess it as we go along, Erik.
Why will it take months?
These processes just take that long. You know, you need to go through the process with the board. You need to mail a circular. There has to be time. Shareholders have to vote on it. These are long processes.
Would you consider going direct to the shareholders?
We have a good board, and they'll assess the offer. And if ultimately, if they don't think that, and the shareholders don't think it's the right thing to do, then we'll just carry on the way we are. We thought it was a fair offer, and we'll see where we go.
I know you don't want to say a whole lot about this, but the words you're using suggest to me that you don't have much of an appetite to offer more than what you've already put on the table.
I said we're not going to talk about this too much.
Here's one thing that's been puzzling me. You announced your interest in top quality U.S. retail real estate, malls effectively, what GGP does, before you made this offer. Why tell everybody how much you wanted it before actually making the offer?
You know, I think, look, we're a fair and transparent organization. These shareholders that own the company are our partners, and we always want to be fair and open with our shareholders and with the board. And we had been that way with the board. We've been that way with shareholders, and we will put an offer out there. We think it's fair. If they want to do something different, then they'll do something different. And but I think at the end of the day, it'll all make sense.
The thing that makes the GGP offer so fascinating is what makes Brookfield an unusual and interesting organization. It takes a contrarian point of view. So we know you're contrarian about U.S. malls, effectively, good malls. We know you've been very contrarian about Brazil, and the early signs are that that was a smart bet. Is there anywhere else in the world that you can be contrarian right now with valuations where they are and with the prospect of rising interest rates?
8 years into a cycle, it gets tougher and tougher, but we always find pockets of things to do. You wouldn't have said 18 months ago that buying solar and wind farms in America was going to be a value investment, yet SunEdison got themselves in trouble, and we bought two companies called Terraform and got a large wind solar business. So these things, if you're out there, these things just come along. But countries, India offers value today just because the entrepreneurs borrowed a lot of money, and the banks are going through a reorganization of a lot of the financing in the country, and there's opportunities there.
You have taken opportunities to sell real estate, American real estate, for example. Where else do you feel valuations are rewarding you to sell today as opposed to buy?
You know, we're always selling.
I know you're always selling.
And we're always buying. And but net in developed economies, in fully let properties or infrastructure or power, where contracts are long and credit is good, people are paying high prices for those.
And that's where?
We've been selling those things. So we've been selling London office buildings. We've been selling New
Even
York.
though you think Brexit is going to work out better than most people think.
We've been buying them too. So we're buying unlet. We're developing buildings today, but we're selling fully let ones at very high prices. We're selling on Park Avenue in New York City. We're selling power plants that are long-term let. We're selling transmission lines that have 30-year contracts on them. Anything that feels like fixed income to us, we're selling, and anything that has operational development work to it, that's our business.
Is there anything you own or a market in which you now and then participate where you'd say prices are stupid?
You know, it all depends on what people's parameters of investment. Even the people that are buying on Park Avenue and buying in London have good reasons for doing it. They either have fixed income that they're taking money out of. They're taking money out of 30-year bonds that earn 2%, and if interest rates go up, they're going to lose capital value.
I know for them it makes sense. For you, what looks stupid to you?
Look, all our business is about buying value. Where it needs operational rework, and scale helps, and global competitiveness helps, and that's where we go. And nothing really, we just stay away from markets when they've risen.
It's not your business, but does the price of Bitcoin look stupid to you?
To us, value is about the intrinsic value of the cash flows on a discounted cash flow analysis. Or, if something doesn't have cash flow, it will be converted into a cash flow stream. There are some assets in the world that don't fit that characteristic. We don't qualify them as assets. And therefore, Bitcoin would be one of those.
It's not an asset.
It's not just not
a currency, it's not an asset.
It has no intrinsic value. And I don't know what it is, but it has no intrinsic value in our definition of intrinsic value. If someone else wants to speculate on it or invest in it, it's for them, it's not for us.
When you sell something today, are you recycling that capital or are you sitting on it and waiting for an opportunity to materialize?
So it depends. If it's in a fund, we're returning it to our investors and we take our portion. We are net long more cash today than we were in 2009. And we keep putting more cash onto the balance sheet, of our own balance sheet, with our own capital, and getting more liquid because, not because we think anything is going to occur, it just seems like a good time to be putting more flexibility into one's balance sheet than not.
So, does that mean you do or do not buy into this idea, this increasingly prevalent theory that the economic cycle or the business cycle or the credit cycle, if you prefer, that we're currently in has legs to extend for, say, another 2, possibly even 3, 4 years?
Yeah, look, I think it could be a few more years, but that really doesn't matter. Those are short time frames for us. Whether we sit on cash or liquid assets for years doesn't matter. There will be an end to a business cycle at some point in time, and we just want to be ready for it. That's when real value is found.
So now is the time to amass that cash so that you can be prepared to deploy it.
Yes.
Even though you might give up something between now and the moment that cycle ends.
In fact, we're always giving up something because by sitting on more conservative investments, financing less, all of those kind of things, we give up something. But it's the time when you need that capital when it makes the difference.